everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Thursday, April 16th. To the S&P 500, and here we see a doji type candle that's been set up following the bullish breakout up above the round number 2100. A bullish candle, white body candle, broke out up above there with the buyers continuing with control, although the buyers did lose some commitment as they tested up very close to the 2114 level of previous resistance, and we can see that shadow on the top that highlights that loss of commitment. Today we have a similar type of shadow, a larger shadow than the previous day's trading, so a greater loss of commitment today, and a day where the market closed around the midpoint level of the range, suggesting that neither the buyers nor the sellers closed with control. And this sets the market up for a change of trend, and that's because for a couple of the issues. Firstly, the loss of control from the buyers, even though it wasn't strong for the previous day, they've lost that control, even though the sellers haven't taken control. But it's all about the loss of control in the uptrend. The buyers being unable to take out the previous highs, so they haven't found that solid upside momentum that they had for the previous day's trading. Also, the lack of size in the body, and that suggests that there hasn't been as great an amount of net momentum for the buyers as the previous day's trading. In fact, it's been slightly to the sellers, but very slightly, with this candle body being just slightly black. Now, this is almost a doji type candle, and it does suggest a lot of indecision in the market. It's a spinning top candle, and we see the shadow on the top but also on the bottom, and that's why we have the indecision where the buyers have lost commitment, but also the sellers have lost commitment down at the 2100 level of previous resistance, and now holding as support for today's trading. So if the sellers are going to be strong enough to change this trend, then they will need to be able to breach that 2100 level. Now, if that trend change does occur, then we do have strong support down at 2093, then down at the Tenkan-sen indicator around 2084, and then at the top of the highlighted zone about 2079, and at the Kijun-sen indicator at 2777. So a lot of support down below for this market. If the buyers are going to come into this market, and it certainly doesn't look as though they are at the moment, but there is a possibility that they could, they certainly will need to breach 2114, and I suggest that if the buyers are able to breach 2114 in a bullish manner, we could see a successful assault through the 2119 major high, but that's still up in the air at the moment. It's with this indecision in the market, it doesn't seem as though the buyers are going to come back into this market, but that's why it's an indecisive candle, because the market could go either way. Now, this is also a potential Japanese candlestick reversal pattern. It's a harami type pattern, and that's where we have the uptrend, and it's only a one candle uptrend, but still I think the ramifications of this type of pattern are important here. And where we have this larger body, the body of the current candle is engulfed within the previous body, so it's within that previous body, and it suggests that the momentum that the market found previously is no longer there, and that's the basis for it. What we need is confirmation, so we'll be looking for a candle with a lower high and a lower low, but obviously a breach of that 2100 level firstly is very important. Now, just looking at the Fibonacci extension technique, and we're examining the relationship of the current first time frame uptrend to the immediate previous time the market was trending up, and here we've seen for the second consecutive trading day the market testing just above the 78.6% level, being rejected from there, and being rejected in an even stronger manner today, and suggesting a possibility of a change of trend, but obviously confirmation required. And the Fibonacci retracement of the immediate prior downtrend, and testing just above the 100% level, which is the high of that previous candle, rejected from there, unable to close up above there, and the indecision introduced into the market today suggests once again change of trend is possible. Now, just looking to the bands here, and we see the market continuing to trade outside of the upper band, and that suggests that we have a bullish bias in this market. The problem here is we've had the bullish breakout and then the lack of follow through now to confirm this very strong bullish bias, and we saw this type of trading activity a couple of days ago where the market broke out on a strong bullish candle, buyers in control, then the sellers came into the market finding support at the middle of the bands, and then breaking out for the day's trading prior to today in a bullish manner. The lack of follow through fails to confirm, and important here, however, is that the top of the band is held as support, so that will be an important barrier for this market moving forward, roughly about that 2100 round number level. And if we do see the market breach within there in a bearish manner, we could see the S&P 500 testing back down to the middle of the bands. But if that area at the top of the bands holds and we see the buyers bouncing in to this market off that region and taking out the highs around this level and that resistance around the swing high roughly about 2114, we certainly could see the market testing up to the major high. Now, just looking at a new type of chart here with the basically with a relative strength basis, and it's called an RRG chart. It's relative rotation graphs, and this is on the market analyst software. This is on a daily basis, and what we're measuring here is the relative strength, which is on the x-axis, and on the y-axis we have the momentum of that relative strength, and we divide the area up into 4 quarters, and the top right hand quarter is the strong quarter. It's the leading quarter, and it highlights those securities that have a positive relative strength and a positive momentum of that relative strength. So that's the quarter that you want to be in, and that's relative to whatever we select. So in this case, I've selected the S&P 500 index, and we're looking at some of the other world indices and looking at the stronger ones compared to the S&P. If we go to the left, we have the improving quarter, and that's where we have negative relative strength but positive momentum, so they're improving out of that negative relative strength. Down to the bottom left hand corner, that's the lagging quarter, and that's probably the worst. You have negative momentum of the relative strength and negative relative strength. And over to the bottom right hand quarter, and that's where we have positive relative strength and negative momentum. Now, obviously what we want to see are those securities that are within the top areas here, and those that are moving higher within those areas. And the one that we're looking at here is quite strongly performing, and it's the Hang Seng Index, and it's up within the leading quarter. It's decelerating because the angle of that trail there is moving down, and this is the trail of that activity over the past 10 trading days. Looking over here to the Shanghai Composite Index, it's been up in that quarter and almost moving down into the weakening quarter. So what we're seeing here is that the Hang Seng Index relative to the S&P is where we should be looking for outperformance. Also, the Indian index, the Nifty here, is one that's moved into the leading quarter here. Also, looking to the on a magnified scale here, the FTSE 100 has moved up into the leading quarter and is pointing up, so it's actually accelerating, and this is on a daily basis relative to the S&P 500. So looking to perhaps a greater allocation if you're trading in a fund where you are able to allocate quickly throughout the world indices. Also over here in the improving quarter, we have the Nasdaq 100 is beginning to improve relative to the S&P 500. Ones that are lagging here is the New Zealand index, the NZ50 moving down and decelerating and accelerating in a downside way away from the strong quarters. The Straits Times index in Singapore has moved into the weakening quarter and is one that you should be allocating away from. Looking to the Australian index here, XAO, is also one that's in the weakening quarter and moving down, and looks like it's moving towards that lagging quarter. So the strong ones were the Shanghai Composite, which is moving down, is decelerating quite strongly, but the Hang Seng seems to be quite strong, and the Indian index seems to be a strong one, even though it is beginning to decelerate. Just using the same process here, looking at some of the ETFs that we're able to trade as far as asset classes go, and comparing them to the SPY ETF, which basically represents the S&P 500. And we can see up in this upper right hand quadrant we have the leading ETFs, which is DBC, which is the PowerShares commodity index, and that seems to be accelerating. Also the VEU is the code, the FTSE ex-USS indices, and basically we're looking at a world index less the US, and that seems to be one that's stronger than the S&P 500 ETF. The ones that are moving downward and should be clear of is the gold ETF, the 20-year plus bonds, treasury bonds is one that's decelerating quite fastly, and looks like it will be moving from the weakening quadrant down into the lagging quadrant. Also the 1 to 3 year bond ETF is in the lagging quadrant as well. So the stronger ones against the S&P 500 are the commodity ETF and the world shares ETF. Now just looking next at the sectors within the US markets, and based on the ETFs that are tradable. And in the upper right hand quadrant, in the leading quadrant, we have still the energy sector outperforming the SPY ETF, which is basically the S&P 500 ETF, and strongly outperforming here. And it was much stronger and was decelerating, but is now leveled off, so still the significant outperformer here. The XLB is the code here. The material sector is one that was improving but is beginning to decelerate and may not make it into that leading quadrant. Some of those that are have moved out of the upper leading quadrant is the consumer staples ETF, which is now moving into the weakening quadrant. We have the XLU, the utilities, is a weaker one, and those that have moved into the lagging include the financial sector. XLF is the code there. The healthcare sector ETF, which is XLV, had also moved down into the weakening quadrant. Basically they're the ones you want to stay away from. It's now moved into the lagging quadrant, so one that is not an outperformer, a seriously underperformer, but it seems to be rotating back up towards the better quadrants, and over the next week or so we could see that sector rotate up into the upper quadrants and begin or become one that we should be perhaps looking to allocate to. But this is a very short-term basis, and probably better looking at these sectors in terms of the ETFs on a longer term basis on the weekly or the monthly charts.